The next panel is, of course, once again hosted by our friend Jordan French, who, apart from his love of cage-free hens, is also editor-at-large at Block Telegraph. No, he's not. He's editor of Block Telegraph and at-large at The Street. So he sees so much and he's able to help us understand even more about token economics. Jordan French.
Thanks a lot, Eric, and I'm glad to see we have seats. You didn't get that before, Andy. There's a famed economist, Theodore Levitt. You know what he's known for more than his name, and that's the term globalization. Coined the term, but he was pithy as well, and he once remarked on financial innovation and said succinctly, people don't want a quarter-inch drill, they want a quarter-inch hole. What he means by that is consumers drive disruption. You have to save them something, offer them some sort of utility or use, or you're dead. On this panel, one of the things we'll discuss is the token categories that Andy eloquently elaborated for us earlier. We want to hear from our panels to deconstruct where is the direction of that market, of these categories, and explain where does the value come from or where is it not, and what's likely to fail and leave room for others. To begin, let's start with Louis. By the way, he's here with the analytics firm Merkle Data. Louis, come on up. Good to see you. Great. Who's next? Christian Ferry. I want to get this. Please, done on the end and save one for me. Christian, unless you don't want to. Christian, lovely to have you. Christian's a board member at Atari, and then Atari Token, and then also investment and advisory firm Blockstar. With as well as lovely Tatiana Kaufman is with us. She's the chief token officer at Full Cycle Fund. Thanks a lot, Tatiana. Please have a seat. And last but not least, needs no introduction, Andy Bromberg. Andy, and I were joking earlier, he's going to have to give his, have a seat, Andy.
Thank you.
Give the talk he just gave without all his visual prompts. I'm going to grab a seat here. Don't forget, I have gifts for you all, just like all my panelists. I do want to dive in here, though. Andy, I think we've heard enough of you. If you want to just walk off stage, you can. Tatiana, I want to start with you. You've had a storied career in financial architecture. There's something that a lot of people are just starting to talk about, and we're just starting to read about, but it's something you've been working on for a really long time, and that's in the security space, security tokens. Can you paint us a picture of where you see this market is headed in terms of what are likely to be the next set of tokens that come out over the next few years?
Sure. So I think Andy gave us a really great primer and introduction on utility network and versus security tokens. I like to paint it in terms of decades. So if we look back 10 years ago, we actually had a financial crisis, our last financial crisis with the derivatives markets. And out of that was really the catalyst for Bitcoin to be born, right? Bitcoin was born just a few months later. And few people know this, but the Genesis block of Bitcoin had a footnote underneath that quoted the UK Times headline of that day, and it said, January 3rd, 2009, Chancellor bails out banks again. So Bitcoin was not the first digital currency that was created, but it was the first one that really had enough force behind it to take off and give birth to this industry that we're seeing today. And so that was almost 10 years ago. You're looking now 10 years later, and we're taking the ledger technology, the actual blockchain from underneath the Bitcoin, and are now rewriting our securities back onto that technology. So that's equities, that's bond, that's derivatives, that's royalties, and other things that we haven't seen before that we're innovating as we speak.
Christian, you've been an investor in the space for a long time. One of the things that Tatiana hints at and also is working on is security tokens. Why haven't we seen some massive proliferation of them already since the angry headlines that spurred the genesis of Bitcoin?
Security tokens?
Yes.
Because they're hard.
Simple as that. It's just, it takes a lot of time and they're very expensive. I'm on the board of a couple of them. One of them is lottery.com. And it's a very complicated process. It takes millions of dollars, multiple millions of dollars to file our Reg A Plus and Reg D 506Cs and push through and go through all the regulatory hurdles, and it's just very complicated.
It sounds like equivalent cost to issuing equity, though, right?
Very much so. It's like doing an IPO, indeed. So that's why a lot of people say, why am I doing this, right? But I think things are going to change. I don't think security token will be the future, actually. It's too hard. And I don't think utility token will be the future either. I think we're going to find a middle ground where it's going to be easier for people, startup and companies to raise money through a token that is going to be a security, but not in the way that we have it today, that make it so hard and complicated that unless you have already 10 million in the bank, you can do it.
I see you're shaking your head, Tatiana. Just hold that thought for a second. It's also early to be disagreeing already. Andy, I want to go back to you real quick, and then we'll head right to you. Andy, for those who've joined us since your last talk, if you could just deconstruct for us, at least at a very high level, the quadrants as you refer to them, and just generally explain what we were just talking about, which is, we have listed effectively 1,500 or so utility tokens. We're now talking about security tokens. There's a lot of whispers of that in these rooms. Can you unpack that for the audience?
Yeah, absolutely. I'll try and do it quickly for those that saw it previously. I would say there's 4 categories of tokens, at least so far. I think there'll be many more in the future, but you can think of it as a 2x2 grid. On one axis, you've got security and non-security. Non-security being another word for what people often call utility tokens. And on the other axis, you've got tokens that derive their value from real-world activity or assets, as well as tokens that derive their value from token network activity. And as a result, you get 4 types of tokens there. The first is a token that is intended as a security and derives its value from real-world activity or assets. And you can think of that as a kind of asset-backed token, so a gold-backed token. Those are really simple to value, generally, because they get their value from the underlying asset. It's a token that represents something, and that's what Christian was talking about. Representing equity or gold or anything else is done with this underlying asset. The second category is a token that's intended as a security, an investment contract of some sort, where it derives its value from a token network. So rather than having its value based on underlying real-world, physical world activity, its value is based on the activity on a token network, but it is clearly not used for anything other than investing in that token network. And I think that's where a lot of these tokens that are right now called utility tokens are going to fall, where their value is purely predicated on activity on the network, but also they're not really used for anything on the network. They don't have to be used. They just represent an investment in that network. And that may be fine, but I think it's a misrepresentation of how a lot of tokens think about their current status. The last 2 categories are the utility token or non-security categories. The first being ones that derive their value from token network activity. And you can think of those as protocol tokens. This is the most common utility token category, something like a Filecoin, Blockstack, where they are not intended purely as an investment. They're intended to be used for something, but they derive their value from activity on a network and usage on a network. There's a lot of ways they can drive value forward and accrue value in the long term. Last category is a store of value token. So a token that is intended to be a non-security, a utility token, but one where it derives its value from real-world, physical world activity. You can think of that like Bitcoin. It gets its value from trust, from inflows, from value stored in it, not from activity just happening on a network. And that's different from the protocol token category that gets its value from the token network activity itself. So those are the 4 categories as I would outline
And thanks,
them.
Andy. And one thing I want to pull out a little later that you referred to was misrepresentation by a bucket of those. But Louis, I want to turn to you, and then we'll get to you, Tatiana. I know you shook your head. Louis, less academic and very more real world. You run an analytics platform that has your phalanges in practically all of the existing tokens on these exchanges. Explain for us the demographics currently, right? Because we hear a lot of these different categories, but certain ones dominate, right?
Yeah, they do. I wouldn't talk about what's going on now. I would talk about okay, where do we think we're going? And I think you mentioned we're going to have store of values, but if we just ask ourselves what's going to happen in the future, what are the necessary things that need to be built? So we're going to have consensus protocols, most likely, so we're going to have tokens powering that. On top of consensus protocols, we'll have to have chains talking to each other. So probably some tokens in charge of interoperability. On top of that, we're going to have analytics, because we're not going to have terabytes of data without analytics. So most likely some tokens powering analytics. And on top of that, we're going to have applications. And when we think about applications, I would really urge any investor in any token to sit and ask him or herself, what are the drivers of the value of the token? Because we have some tokens where, well, it's supply, demand, easy, Filecoin. And you have some tokens where like it's not as clear as that. So let's take Numerai as an example. The fundamental driver of Numerai's value is the quality of the data scientist, the quality of the execution platform, and the expectation of the data scientist on their ability to predict prices. So if you want to do a due diligence on these three factors, good luck. So yeah, I would really push investors to really ask themselves, what are the drivers of these tokens I'm investing in?
And thanks for your thought there, but I do want to go back to the question just so people can understand the constitution of the current market. Appreciate your prognostications, and then also certainly the two examples of coins that are on the market now. But largely, the current market is what? They're largely what you would call utility tokens. Is that right, Louis?
Yeah, you have utility tokens. I mean, as an analytics company, what I see today is that we are mostly focusing on Bitcoin, Bitcoin Cash, Litecoin, Ethereum. So, I mean, you could argue that the first ones are just store of values. You can put Ethereum in one or the other category, but for now, yeah, it's mostly store of values.
Right. So one thing we're establishing here is that, you know, in looking at this question of, you know, what's going to dominate in the future, right? And that's where everyone's going to likely make a lot of money. Going back to Theodore Levitt's quote around use and utility, a broader definition, we're starting this race with predominantly, you know, what look like utility or quasi-utility. Store of value tokens like Bitcoin certainly looks and acts like a commodity. A lot of people have said that that's a store of value. There was some disagreement, though, earlier, and some of the things that you touched on we'll get right back to. Tatiana, you were shaking your head no when Christian was speaking specifically about the costs of security tokens right after he said they're really hard to do. Do you disagree?
Sure. So I think, you know, we're a new industry, so there's hurdles that we have to overcome. There's regulation. Right now, we're spending more money on lawyers than we would for normal issuance. So I would agree with you there. However, there's so many cost benefits and efficiencies to actually issuing this way. For example, if you are a share that's issuing a dividend, you could have automatic distributions. You could have automatic KYCML. You could have settlement that usually would take 2 to 7 days on the trading floor. Trust me, I would know.
Can you spell out? You said KYC, and sometimes not necessarily everyone knows these terms. Can you just explain what those are?
It's know your customer. So essentially, you're figuring out if your customer is accredited or non-accredited, and you're taking a snapshot to see if they're qualified to buy your security or not. So the goal of this industry is to have global open trading markets where you can have both accredited and unaccredited investors, right? And that's something that we're working towards with Full Cycle. But obviously, you have to surpass certain hurdles while the market and the regulatory market specifically grows with you in this industry. So I don't think it's an impossibility. I just think we're maybe on a 2 to 5 year track to create a new normal.
Yeah. By the numbers, Christian sounds right, though. I mean, how many security tokens currently are on the market?
Sure. So there's Blockchain Capital, BCAP. That was the very first one. There's Science Blockchain. There's Spice VC. So all of those are venture capital funds. Venture capital funds are prime for tokenization because it's a liquid asset traditionally. So creating trading is very appealing to those funds of those shares. And then there's lottery, which is still incomplete, but en route to be very successful, and a handful of others in the works, a few dozen in the works.
And so, Louis, I want to go back to you on this because, again, you're looking at the current market. Prices of a lot of the non-major, let's say Bitcoin, for example, and some of the larger cryptocurrencies, Ether, have held up relatively well, relative certainly to a lot of the utility and other types of tokens that have traded out there much more recently in ICOs. A lot of them are down 95, 99%. That's not necessarily the case for Bitcoin and Ether. They've been relatively spared. Is there room for even more tokens at all, even if they're security tokens? Isn't this bad for the existing market?
You mean a 90% fall in the price?
Won't they go down even further if there's these better tokens coming along?
I mean, if nobody's delivering value, they shouldn't expect the price of that token to go up, right? I think there's been a lot of projects. I mean, there's been millions of dollars given to first entrepreneurs who are not even able to manage $2 million. So we shouldn't be surprised to see the price falling. And actually, I think it's healthy for the market because all the bad projects are going to be wiped out. And then investors are going to be ready to invest capital in teams that are actually able to deliver value. So actually, I think that the huge drawdown in the market today is actually very beneficial for the space.
Right,
Can I tag
I
on
would
to that
agree
too?
with that.
Well, I do want to go to you next, Andy, because one of the things that you pointed out, and I want to point it out too, is you've only worked at CoinList with 6 projects now, and you received some ungodly 2,700 or so, in the door. That's a lower acceptance rate than, practically anything. It sounds like it's either a lot of garbage out there or something else is going on, and you're waiting for security tokens. What are you waiting for?
Yeah, so I think one thing I would tie in just about this idea of new tokens impacting other tokens in the space is this analogy we talked about earlier of blockchain being like the internet, where different types of applications are built on top of it. And if you call it, businesses built on the internet, and you said there's a lot of social networks out there, but I'm going to launch a grocery delivery service. I don't think the launch of that grocery delivery service impacts the success of those social networking businesses. Now, if you introduce one more social networking business, then you've only got so much capital or users or activity or attention devoted to that category. So that category, some of them might suffer while others succeed. But I don't think it's zero sum when new categories of tokens and new types of tokens get introduced. It doesn't necessarily cannibalize the same capital, the same market share that other tokens have in them. If you launch a bunch of securities tokens, asset-backed tokens, for example, I don't think that necessarily impacts something like Ethereum negatively. I think it's new capital that will come in because those things are not substitutes for one another. They're different types of assets that are built in the same underlying technology.
And it begs the question, though, where is that new capital going to come from? Christian, I know that you've had your pulse on institutional investors, some of the other investment demographics out there, and that's something, especially media, we've been writing about for months and months and months. They seem sidelined. Is it so obvious an answer? Is that where this new influx of capital that Andy refers to, or is it something else entirely?
I think institutional capital would definitely be a prime spot for new money coming in. But also,
what do they want? What are they looking for?
Institutional capital? Well, so I actually listening to the presentation from Andy. I agree with you that it's very important to have the right UI so our mom can actually play in it. But I think when institutional capital comes in, you have these huge, massive brands that have been around for 200 years, right? All they want to do is just not lose their reputation. Their brand reputation means everything to them, right? And their reputation means sustainability and revenue and clientele. And so I think that the problem here is not really from a UI standpoint, but it's more about 3 things. And we talk about scalability in the system, which I don't think is true. It's pointless to talk about sharding and plasma and scalability at this point, when 0.1% of the population in the world uses blockchain. Raise your hands. Have you heard about the Maslow pyramid of needs? Right? What is the first one? What is the first level? Right, which is security. Right? If you feel safe, right, you move on to the next one. If you feel threatened, you don't. So that's the first step. That's what they look for, right? Security, right? And it's not just the wallet security, exchange security, the ICO security. The entire is like the SSL network in a website, right? Everything has to be securitized so that my mom, your mom, institutional capital will feel comfortable putting their money in. Once that happens, from a token standpoint, you need to have stability. Because you can't go out to Starbucks today and go buy your coffee for $5 and go buy it tomorrow for $50. That's why bases and alike are very, very important.
Christian, are we on the second level of Maslow's hierarchy now? It was security, and now we're at stability?
Yeah.
Okay.
Well, I define it as my own hierarchy. I don't know what a hierarchy is. That's my prediction.
Okay.
So I think security, it's just human psychology, right? Security first, stability, and that's when people are going to start using. They're going to put the money in when the system is secure. They're going to start using the money when they're actually stable, right? They can go buy groceries with it. And lastly, we're going to talk about scalability, because once people feel secure and they start using it, now you have a lot more people interested in playing the system. So now you have 10% of the world population using blockchain. At that point, it makes sense to talk about plasma and sharding. That, to me, that's what when institutional investors and mass adoption means.
You mentioned twice plasma and sharding. For those who don't know, can you just quickly explain those two terms?
Yeah, it's just basically the next evolution of Ethereum. It's a new way to basically increase scalability in a way to basically use off-chain transactions and hashing and a lot more in a sense. But basically, it's to make Ethereum scalable.
And some people don't think it'll work.
It's a good point. It's a good question. I think a lot of the price crash that we've seen in Ethereum is in the fact that there's a lot of competition now with Ethereum. We see EOS, Stellar, we see OneChain, we see NAM, we see a lot of competitors that we didn't have a year ago or so. And so people are thinking, oh, what's happening with Ethereum now with 13 transactions per second when EOS can process 1,000. There's a nice article by a young gentleman called Jeremy Rubin, MIT grad, super smart kid. He's in the board of advisory of Stellar. Look him up, Jeremy Rubin. He just wrote this article, I think, on Steam, called "The Death of ETH." Not ethers, no Ethereum, but ETH. And he basically making the point that Ethereum is going to go to zero.
What does that mean for the existing tokens on the market?
Yeah, that's a good question. You mean Ethereum's or all the other crypto?
All the other crypto. We're talking about the dominance of cryptocurrencies and which types will reign. And we've already established that largely right now. Most of them that trade are utility tokens.
So what's happened so far is that last year, 2 years ago, up until 2014 when Ethereum came out, most companies were actually building on Ethereum. Right? That was the status quo. But as we see much more competition, right? People are saying, wait, I would love to develop on Stellar. Wait, but I can't because exchanges are not compatible with Stellar. So I'll do my ICO on Ethereum, then I'm going to flip. That's what I've been doing. So your question is extremely interesting, right? If you asked me that question a year ago, it would have been a problem for a lot of companies, right? But today, if this company have an alternative and end up flipping to another platform, right? I think the ecosystem will be okay. I don't know very much about Ethereum. I think Ethereum will be there, but I don't think it's going to be as strong. I think we've seen a lot more competition, a lot more.
The article that you referred to, it started out in Steam. It was translated over into the language of TechCrunch too. It was very popular there, and it basically called or claimed, in one conclusion among many, that Ether, which is the token of Ethereum, would head to zero. That wouldn't necessarily impact the utility tokens on which it's based. But back to my question, though, Christian, and I want to turn this over to you, Tatiana. I think what you did here, Christian, is show this is even murkier or cloudier. Because my question was on institutional investors poking holes in the dark to find out where the money was going to come from to drive that next leg of dominance, particularly in securities. Where do you think this money comes from, Tatiana?
I think we're making this way more complicated than it actually needs to be. Security tokens are asset-backed tokens. Security tokens is a regulatory term that can include network tokens, but the actual asset-backed securities, digital securities, it's just the how, right? So if you're looking to invest in real estate, you're still going to invest in real estate. You're just going to have a more liquid tool, a more transparent tool, a more efficient tool to invest through. If you're looking to invest in energy, which is what we do, again, you're still investing in the same asset. You're just using a better tool to do it through. So the same capital that was flowing into those assets year over year is the same capital is going to be flowing through security tokens. I don't think it's going to be all that different.
I respectively disagree. I see where you're coming from. But I think we also have to specify what countries and regions, right? Because maybe in the United States for the next 3 to 5 years until we find a better alternative. But if you look at countries like Switzerland or Germany, they actually have a framework for utility tokens. So that might be it, right, for those countries. The United States not, because you have the SEC, right? Although I think that security tokens are going to be the near future But again, to me, they're too complicated. I think we're going to find a middle ground. I think that the definition is semantics, to me.
What are security tokens to you? I feel like there's a functional term and there's a regulatory term that we're disagreeing over.
It's a regulatory term to me.
Okay.
The functional term is the same.
Okay.
But the regulatory terms to me, there's going to be much more simplified regulatory environment to support the security.
So to you, security tokens are the two subcategories of compliant network tokens and then asset-backed tokens, right? So
Yeah.
in my previous statement, I was referring to asset-backed tokens, which just are real securities in a digital form.
Let's dig into that in a minute, Andy. I want to turn to you. I want to drill into those 6 projects that ran the miracle mile to get picked. Categorically, what were these?
These generally fit into the category of protocol tokens. And I talked about this earlier. There have not been, Tatiana enumerated them well, there have not been a lot of tokens in the security token category, either profit tokens or asset-backed tokens thus far.
Well, how many have there been, actually?
Depending on how you count it, probably somewhere between a half dozen and a dozen out there that would profess to be security tokens, that publicly talk about themselves as security tokens. Dozens more in the works, like Tatiana said, but somewhere between 6 and 12 probably out there publicly saying we are a security token.
Were those part of any of the 2,700 that were inbound to you?
Some have been, yeah.
And you rejected them.
We have rejected security tokens, but and I should say too, including that 2,700, that is not all tokens that now currently exist. Many of them have applied recently and don't yet exist. So they've applied in anticipation of a sale. We have rejected them, and they have not yet ran a sale. So they may not yet be public, but we've rejected a lot of security tokens, and that's not because we reject the category of security tokens. In fact, I'm really interested in that. I would love to see some asset-backed tokens or profit tokens that CoinList can help offer to our investor base. But we haven't seen any we think that are meaningfully valued. And a lot of this comes down to, and you mentioned this earlier, you flagged this earlier, misrepresentation or exaggeration. A lot of the security tokens that we have seen have seemed like really aggressive, profit-seeking things, trying to take advantage of what has been a very frothy market. And they've come to us and said, here's our security token, here is the asset that represents it in the case of an asset-backed token, and here's how we're valuing it. And the valuation is wildly out of line with the underlying asset. And there are a lot of people out there trying to capitalize on this idea of this frothy token market to raise money for an asset that might be distressed or have trouble raising otherwise. And that's why we've rejected a lot of them, not because of any sort of kind of carte blanche rejection of the security token category.
So ironically, one interpretation of what you're saying is that the cryptocurrency market, because of any number of reasons, perhaps regulatory ambiguity, has attracted, at least in part, weak, distressed, or garbage assets that might be overpriced. Are you witnessing that?
Yeah. Yeah. So we see projects that are supposed to be asset backed, and we actually figure out using our data that most of the value actually comes from either fake volume or just trading in between a very limited amount of large investors. So you have some projects where, the value just comes from the fact that you have 20 people virtually in the same room trying to fight against each other, but like the actual value of the asset doesn't really matter in all of that.
Tatiana, doesn't that poison the well immediately, at least in the short run? You're starting off on the wrong foot. It sounds like, at least between Andy and Louis, they're witnessing at least the initial foray of security tokens is overpriced garbage.
If that is true, it is nothing compared to what we saw in the utility market. The amount of garbage that we saw come out in 2016 and 17 is atrocious. 800 coins died a month ago as evidence of that garbage. At the very least, these tokens are subject to regulatory regimes, and they offer some protection to investors. So I haven't been seeing a lot of garbage. I actually have been pleasantly surprised by the amount of good projects out there. I think anytime there's something new and shiny, distressed companies that are having trouble raising money in a traditional way will flock to it and say, well, if I come from it at this angle, let's see if it works. But the amount of companies that would never be able to raise traditional venture capital that chose to issue utility token that had no network and no desire to build a network, that way surpassed anything we're seeing in the security token market.
Do you foresee or forecast a bit of a doomsday on the horizon then for a lot of the existing
Utility
trading
tokens?
tokens?
I mean, we've already had a bit of a doomsday when 800 of them died in the span of a week.
Louis, how many
I think
at
more
the
will die.
beginning of the year? How many tradable tokens were out on the market roughly?
Don't have time to count the number of tokens.
Okay, but just broad strokes, oxygen in the room
Yeah,
or
you
not.
must have like maybe 1,000. But I mean, honestly, the number of interesting tokens, like you don't have more than 50.
And is that number dwindled? Has it narrowed?
Yeah, it has. But I
Two?
mean, it depends.
What number
It depends
relative?
whom you're talking about. If you're talking about a venture capital, they would be looking for a good team on sustainable cash flows. If you're talking about a trader, they're going to care about volatility, they're going to care about volume, and that's it. Like, we're really talking about two different types of people having two different types of incentives. So traders would be happy to trade maybe 200 tokens because some have enough volatility and enough liquidity. If I'm a VC, I wouldn't invest in more than 50 of them.
We also do see there really being two token markets broadly. There's a massive market of things that fall into the scam, spam, fraud, bad actor, totally useless category. And then there's a set of tokens that might end up having value long term. And I would look at that second market as like the market for startups. It's not that every single one of them is going to succeed. In fact, a lot of them are going to go and fail. But at least they're done, or like many startups are, by people with good intentions, trying to drive real value with an interesting idea. Again, it may fail. That is not to say that every token in that market is going to be successful, but like Louis said, maybe that's the 50 tokens. You've got a bunch out there. 5 years from now, not all of them will exist. 10 years from now, even fewer. But at least some of them will, and they were all done with good intentions. And there's a massive number, 1,000, 2,000, 3,000, 5,000, however you want to count it, of tokens that are out there, totally valueless, useless, maybe done with bad intentions, or at the very least done thoughtlessly. And that category, I think, is a totally separate market. And they're not really worth conflating because they're done in totally different ways.
Yeah. Maybe think just about, projects delivering value, very interesting for VCs, very interesting for traders if they are long hold. I would say all the trash tokens, it's a zero-sum game. You have large investors fighting and trading for these tokens. At the end of the day, there is only so much money to be made. Some will be losers, some will be winners. But this has nothing to do with the underlying value that will be delivered by the projects.
Okay, and I want to do a quick lightning round before we turn it over to the crowd, and that is just to really clarify your positions on this on a forward basis, and let's step out a few years. Let's call it 3 to 5. We know where we are now, and predominantly, it sounds like we still have a lot of utility tokens trading. They're kind of like failing. We have 800, as you claim.
I think that was like
Been
the
obliterated
last dip,
just-
not this week's dip, but the dip
Right.
that we had a few weeks before that.
Very recently.
Yeah.
And it sounds like there's some hints of security tokens entering the market, but they're potentially way overpriced, and the underlying assets are trash. This trash, as you call them, I call them garbage, Louis. Same definition, or same terminology. This sounds like a nearly uninvestable space. But on the question regarding dominance, and let's give it temporally 3 to 5 years out, that way you have a range. Andy, does this market change significantly?
Absolutely. We are less than 3 to 5 years into the token market in any sort of meaningful way. I think there's going to be massive change in the next 3 to 5. So I would say securities tokens will professionalize. We'll see high quality ones. They will grow to have a massive share of the overall token market. And the utility token landscape is going to shift dramatically as investors get better at diligence, better at understanding what's spam, what's scam, what's a fraud, and what's actually potentially a good project.
Tatiana?
I think we're in year 1 of what finance is going to look like in the next 10 years. Every exchange is going to have blockchain technology built in. Every piece of equity, every bond, every derivative that you will trade 10 years from now will be a security token.
So no more stocks, no more bonds, no more mutual funds. both
Functionally,
tokens.
they'll still represent, interests and assets, but the way that they will be structured, again, it's not the what, it's the how. They will be structured as asset-backed tokens.
Trading desks will be either we'll have to pivot or be pretty angry. Christian?
I think utility tokens somehow will fade away
Entirely.
I don't know if it's entirely, but they'll slowly fade away. It's hard to regulate and understand like what those things are, and there's a big concern from regulators all over the world about that, right? So I think there's going to be a different sort of regulation, just like happened in 2015 with the Jobs Act. And so I think we're going to have more new token. I don't know what we're going to call them, but there's going to be a lot of real estate and asset-backed tokens. Think about private placement, VCs being able to tokenize their private placement in companies and giving access to everyone to their early Facebook, right? Or real estate or anything else. I mean, I'm confident of that. I mean, we have a practice that does just that.
You mentioned Facebook. It trades as a stock. Are you saying that in 3 to 5 years we're going to trade Facebook tokens, which are equivalent for the stock?
We could. I mean, one of the things that I haven't even figured out yet is why companies need the big four, right? JP Morgan, Morgan Stanley to go IPO. Why can't a company issue their own token and go IPO themselves? Right. So the point of that is, yes, we can. Yes, we can. Can we do it now? No, we can't. But again, to me, we need more regulatory approvals that in turn legitimize the space, and in turn make this kind of big brands and companies come into the space.
Louis?
Yes. So I do think that utility token will probably help disrupting large industries that are monopoly today. So social media, electricity, whatever. I think where it's really hard for me to wrap my head around that, because if we think about people investing in utility tokens, at the end of the day, we are mixing the economics of the pricing of a product on the economics of trading a security. So, I mean, it's as if essentially Walmart was indexing the price of their product on their equity. So people trading the equity will impact the price of the product on the other way around. It's really hard for me to wrap my head around that. So I would imagine a future where some sort of utility token will disrupt industries. Are they going to be designed the way they are today, and are they going to be traded the way they are today? I'm quite sure not.
Louis, we're out of time. Please give it up for the lovely, wonderful panelists. Hope you found it very informative.